Hey guys, this is Terry from Harmonic Forex. So I will be in charge of doing this video analysis for you guys for the next week. I just want to apologize for doing this video up. One day late. We usually do this on a Saturday or a Sunday, but I was too busy last 2 days, so I have to do it on a Monday. But the good thing is that once Monday the market opens, everything becomes so much clearer, and I'm able to actually give you a better and more quality analysis than usual. So let me start off by thanking you guys for following us for the past 2 years. We have grown from the FS Gum days to the Harmonic Forex days, and now we regularly conduct seminars for you guys in Singapore live. So I'm sure that many of you guys also know about our signal service, which we have just launched. And today I'll also be covering some signals that we gave out last week and some of the upcoming trades setups that we are looking at closely. So we hope that I hope that you enjoy, and you'll find that the video that we prepared for you is very beneficial. So let me start off by recapping last week on the euro dollar. You see that we actually caught out on long cipher pattern on a euro dollar, where we look to go long around here. So what happened then was that signals that we put out, we definitely would take. This is a real counter trend trade which did not work out well. So within just a few hours I was actually stopped out, and this is the result. Yep, euro dollar minus 55 pips in less than a day. So we lost, and we'll be honest with you guys. We're transparent and nothing to hide. So we lost on euro dollar. But last week itself, I also did a good trade which I did not manage to share with you guys, which is with the trend long on the Canadian Swiss franc. Those of you guys who have came to visit us on Saturday during our live seminar, I would have covered this with you all. So this is a long bad pattern which concluded at 0.8422 on the Canadian Swiss franc. So what happened then was, this is a bullish market, it's trending very heavily to the north. So what happened was that I tried to look for bullish setups, harmonic setups to actually ride the trend, and I was pretty lucky. I got in around the low, and I managed to ride all the way up to the 86 level, which is here. So I bought it close to the low, and I rode all the way up for 5 days, and I got out on Friday, 156 pips based on harmonics. So some of you guys might question, how come some trades you all share and some trades you all don't share? Yeah, my explanation to this is that some days we are really out on the road, we don't stay at home all the time. So there might be good signals where we cannot blast out the signal in time. So I really apologize, but going forward we are trying to release every good signals that we see, every good setups, and just to help you guys profit as much as possible from the trading harmonic patterns. Yep. So what's next is that I'll be covering 3 pairs. For this week I'll be talking about the dollar CAD, the euro against the NZ, and also the Aussie against the yen. Yep. So let me start off with Aussie against the yen. Yep. As you know that yen is very bullish for the last few months. Dollar yen went from a low of 94 all the way to 109,000 over pips. So it's really crazy. Yeah, but if you look on Aussie itself, Aussie actually crashed very low. It went down so much. 2 weeks ago I talked about Aussie hitting a low. It's gonna hit a low of maybe 80 cents. Yeah, which I'm still gonna stay. I'm gonna stay with my analysis, but I'm not in any short at the moment. But for you guys who are confused between the strength of the yen and the weakness of the Aussie, you can probably look for the Aussie against the yen as a potential guide on how they are going to perform. So for the Aussie against the yen, what I see is that I can find a bullish harmonic pattern setup. Yep, this is called a cipher pattern. Okay, just see how I do all the steps slowly. Yeah, if you do come for our live seminars, we actually explain every single step to you on how we draw these triangles. Every single time you come, you get to learn one good pattern, all the details on how we place our stops, our targets, and the rationale behind what we do, what I mean why do we do what we do. So if you are a guy who is struggling with your trades, and you wish to find out a system where all the s- all the potential entries are leading, you don't have to wait for indicators to cross, you can predict prices ahead of time. If you're interested in such a system, I feel that harmonic is one of the best out there, which has served me well for the past 3 to 4 years. So I'm sure that there's something that you can benefit from this system. So come check us out. We will actually talk about the next seminar. We'll confirm dates within the next week, and I'll share with you guys on how you can watch us live in the next 1 month. Okay, so back to Aussie yen. What I see is the bullish completion of a cipher pattern. We fully expect the price to continue coming south, minimally to the 96.70 level. Yeah, let me check for confluences of Fibonacci. That's pretty good. Two zones that we are really watching. If price does a very nice bullish close in either of this zone, we might be going long. Stops, we'll just put it below the low. Just use an average of about 20 pips will do. And take note that this is a hourly time frame setup, so it might not be the most accurate out there, but this is one of the trades that I'm definitely waiting, and I'm likely to go. I'm likely to actually take this trade, going long on the Aussie yen. Okay. So next up, I'll talk about the dollar Canada. Okay, this dollar Canada setup is one of the signals that we put out last week. So we are still waiting for our entry. This is also a bullish cipher setup. So as you can see, this setup and the previous setup looks very, very similar. And we are waiting for this zone here to actually go long. But potentially this zone here is also a zone where we'll watch for some clues on whether it will turn here. We cover all this in our actual course, where we share all the nitty-gritty details and the secrets that we have been trading with to help me achieve a 40% net returns for the last 3 years annually. So we'll be watching these two zones. Currently our signal, the one that we put out to you guys, will be buying at the lower zone. But if we decide to change our mind and buy the upper zone, we will update you guys accordingly. So entry will be 1.0855 around this zone, and your stop should go below 1.0820. So probably about 1.07, 80 to 90 would be a nice level to put your stops at. Drop below the low. Yep. So this is on a dollar Canada. Last but not least, I want to cover this euro against the Kiwi. I guess many of you guys here do not trade cross pairs like euro against the Kiwi, the risk against the commodity pairs. But in this kind of very trending market, what we found is that this cross pairs has a lot of opportunities, especially for our system, to actually help us profit, even though we cannot catch the trend. So many times the majors are trending heavily, but cross pairs like Euro NZ, Sterling NZ, there's a lot of very nice setups where we do not have to be trading a trending setup. We can catch turning points in the range. Yep. So for Euro against the NZD, we are looking to buy somewhere pretty low. This is a hourly 4 setup, so we are probably about 200 pips away from our entry. This is how the pattern looks like. Yep, we are waiting right here. 1.055, 80 to 85. This will be the zone that I'm watching very closely for potential buy. This is called a bullish bet pattern. So I expect Euro to continue weakening the next 2 weeks against the Kiwi dollar. But once it comes to this zone here, we'll be watching for a few clues on whether we should enter a buy right there. Yeah. But this is one very good setup which I do not mind just putting on pending order and just buy at this zone here. Stop loss should go below 1.5537, probably about 1.5480 to 90, because round numbers are very good next, where you can easily attract a market to, you know, to actually be attracted to this round number. And if we put our stops too tight, you know, we might get stop out. Of course, during our course itself, the Harmonic Forex course, which has been running for 6 seminars, you know, over the past 2 years, where we have 10 to 15 traders joining us every single session, we will share, you know, how to put a strategic stop loss. You know, different pairs, they do have different volatility. Some you know, they are slow moving pair. Stop loss of 20 might work, but for some, you know, like volatile pairs like Euro against the Kiwi, it moves at an average of 130 pips. A 20 pip buffer from the low here might not be sufficient. So we do teach you guys how to use the volatility to calculate a very strategic stop loss, which will ensure that you do not get stop out as often as before. Yep. So let me recap what we talk about today. First is the Aussie, we are looking at the long 96.70 or 96.50, just between these two zones, 20 pips different, and stop loss should go below 96.10 hourly one time frame. For the dollar CAD, we are looking to long to either in this 1.0879 zone or the 1.0850 zone, one of these two zones. Stop loss should go below 1.0780. That will be a very good strategic stop loss. Okay. Last but not least is the EURNZD, where we are looking to buy 200 pips off from here. So if price ever comes down to 1.5881, we'll be looking potentially to buy. Yep. So this is what I have for today. We really hope that you benefit from our analysis. We are very transparent on whatever we put out in videos. We will actually recap the following week, and there's nothing that we want to hide from you, because we want to brand ourselves as the #1 most trusted harmonic forex portal in Asia. Yep. So again, thank you for your time for watching this video. I'll talk to you again soon. Have a good, awesome week.